Hello, my name is Matthew Kidman, and welcome to the latest episode of Success and More Interesting Stuff, brought to you by Livewire Markets. Stockbroking is a dangerous game. Investors depend on your advice, but the smallest slip-up can see the relationship turn nasty. As a result, most brokers try and be as conservative as possible. Not Hugh Robertson. Robertson, a 40-year veteran on the stockbroking scene in Melbourne, thrives at the risk end of the curve. Specialising in micro and small cap stocks, he works like a gold prospector, out in the field with his metal detector looking for the next big discovery. His list of wins includes Monadelphous, ServiceStream, Bellamy's, Hub24, Afterpay and PSC Insurance. He found most of those companies well before they'd been researched by the investment community, and in some cases, even before they listed on the share market. Robertson has a unique style. He does not rely on numbers to make his decisions. To make matters harder, he has always found reading difficult. Instead, following his natural instincts, he garners information by getting to know people. His conversations are endless, and his intuition for what might work is uncanny. Most investors would have run into Robertson on Collins Street with a cigarette in one hand and the mobile phone in the other, on the scent of the next big thing. Does it mean that he gets all his stock calls right? Far from it. Like anyone dealing in small companies, there are always disappointments. His troubled children include EnviroSuite and Maggie Beer, but the ledger sits firmly in the positive. Interestingly, Robertson is comfortable sitting on the boards of the companies he backs. Some people in the investment community would describe this as unorthodox, but Robertson likes to make sure he knows the people running the companies he is recommending to his clients. And if the company heads down the wrong path, he is prepared to make the changes required to right the ship. His other great love is the land. Like most Collins Street farmers, it has been a rocky road. Early setbacks, though, have subsequently led to some prized properties in rural Victoria and probably the best garden in the state. I first met Hugh nearly 25 years ago. He had an idea for me called Iron Carbide. It was a profitable investment. Welcome, Hugh.
Thanks, Matthew.
Iron Carbide. That was like Graham's Salthouse. That was an interesting journey.
Salthouse, salty. Yes. It was good till it wasn't.
We made some good money. But you were early on the out as well, I remember. There was warning signs there. But for the listeners, Iron Carbide rose to prominence as an alloy wheel manufacturer for Harley-Davidson.
It did. It bought
US
the Borg-Warner assets, wheel assets, and forgive the pun, put a spin on them.
Very good, very good.
A spin on them. And Graham was a serial acquirer, and he acquired, but the problem was that the story began to change. It sort of, pivot is perhaps not the word, but it began to change. And that is always the first sign of a problem.
So you always look for that. Is the story consistent from the people running the companies?
Yeah, well, everybody has the right to change their opinion and change their views and change where they're taking the business. But when you try and justify the change on the basis of what you've already been doing, it looks as if you're sort of backfilling, and that never looks good.
No, it never looks good. No, I remember that you said, you've got to have a look at this, Matthew. And so we went over to Adelaide.
Yes.
It was Salthouse and the team were in Melbourne, but the actual Harley-Davidson manufacturing plant
was in Adelaide.
And we went there, and I thought it was something out of the Industrial Revolution in Manchester in 1780. It was this old factory.
Yes, Dickensian in the extreme. Yes, it was.
So it was interesting, but we did make money. But luckily, we also got out, and I do remember the fateful day where he did a presentation in Sydney, and the result was out, and then he said, we're going to do a capital raising, and you could see there was a $50 million hole in the accounts where the CapEx had blown out.
Mm.
And that was a great lesson for me, that always watch the cash flow. While you're watching the person running it and the story they're telling, the other part of it is watch the cash flow, because I think in the end, everyone agreed he was capitalising a lot of costs.
Oh, well, capitalising is often the great voodoo to hide money being sucked into the business or out of the business. I think Salthouse, I don't know what's happened to him, but he started with Hawker Richardson.
Under Alan Jackson?
Well, it got knocked off by the indomitable Mr. Jackson, and then Iron Carbide. And I had bits to do with him because he took over another company that we're involved with called Champion Compressors, who led the world in screw compressor technology. I think that's an interesting niche. But I think this one, being Iron Carbide, was probably one of the more naked examples of financial engineering, which, as you say, you've always got to be very careful of.
Yes. And as I said, for a young guy like me who was learning how to professionally invest, it was a real eye-opener, something that's always stuck with me. So thanks for introducing me to that.
We made money and we learned some lessons. I'm pleased you made a quid.
Normally you learn lessons from mistakes, but that one worked for us. Well, let's go back. Rural Victoria. What was your hometown?
A town called Gisborne, which is, when I was growing up, was a small community on the 60 kilometres, 70 kilometres from Melbourne. And I had an idyllic childhood other than the fact that my father died when I was 10. So one big setback there.
Was that a shock or?
Well, to me it was, but not to anybody else it would have seemed. Right. And buried in the mists of time now, sadly. And then off to boarding school where I was, I certainly didn't lead a privileged, I led a privileged upbringing by definition of the fact that I went to boarding school. So, but my goodness, the sacrifices that were made for me to do that were remarkable. And it takes you a long time to look back and think, well, why did my mother or my mother and then my stepfather, why did they never go on holidays, and why did they never ever go to restaurants, or why did they never ever really buy new clothes? Well, that was all because of the fact that they were paying for the school fees. So, but of course, in the way of youth, I took all that for granted. And
it's been a pretty good investment for them.
Well, you'd like to think so, although the arrogance of youth, I think that's all been knocked off me by now.
And Gisborne, what was the family doing there?
We had a farm. We had a small mixed farm, say 1,000 acres, and it was a very pretty property, very nice place to grow up, nice farm. But I worked out very quickly that farming was not for me. Crutching 100 lambs prior to being sent off to market quickly disavowed me of ever going onto the land.
As a career?
As a career.
Because as we said in the introduction, you definitely have gone back on the land. And I know it's one of your great loves to spend time on your properties, but in particular the one at Macedon you've got these days.
It is. Look, I have a natural, Bridget and I, but my wife and I, we both have an affinity for farming. I'm a shit farmer. I am the first to admit that I might get stocks wrong, but I get farming 100% wrong. So I think that from my point of view, it's not the romance of farming, it's the fact that there is something both wholesome and worthwhile in farming. And
it's a bit creative, isn't it?
It's a bit creative, and you can leave a legacy. I love planting trees, and one might say, well, that's just beautification of a property. Well, yes, it is, and I'm no capability Brown, but I do see that as being something that probably I'm obsessed with, which is trying to leave what you've got in a better state in which you found it.
Yeah, that's quite noble. And I was going to touch on this later, but we may as well go in there now. Your Macedon property, been a great investment, I would imagine. It's not the farming, it's the land itself that's gone up in value. But you've also built one of the great gardens of Victoria and maybe Australia, and you show that each year, twice a year, I think.
We do.
The public come in, which is and you give a lot of that back to the community.
That's all Bridget and her team. We do. Look, we're lucky in the sense that we inherited a beautiful garden. We'd like to think we've maintained it and improved it. You'd expect me to say that.
And how many people come through on the public showing?
Over the year, 5,000. And it is delightful. It is so nice to share it with other people, most of who you don't know, of course. It's not an invasion of privacy. It's funny. You look at it and you think, well, are they invading your personal space? Not at all. In fact, the pleasure it gives people to wander around, and the pleasure it gives to me and to Bridget to watch them wandering around is immense. So, as far as we're concerned, they can come and stay all day. They can have a drink or 10, and they can have food, and they can buy plants, and it's just a very nice day.
And the money raised from people coming
goes back to a whole variety of local community organisations, from the SAS through to whatever. Look, we rely on the community, whether it's the CFA or the SAS or SES rather, or other groups as part of a community, and they're very important to us. So we raise, roughly speaking, $40,000, $50,000 a year, and that goes back into the community.
Terrific. It really works well. That's a nice ecosystem on something worthwhile looking at. So let's go back to business and stocks. So you're on the farm, your father passes away, you go to boarding school. Where did you get the idea, or as a child, the share market was never talked about? Or it was? Where was the germ of the idea in the first place?
Well, my mother had a portfolio.
It's a common theme among our guests that the mothers
had the portfolio. And my grandmother had a portfolio. And when my father died, I sort of fell into the role, weird though it may be, of looking after those portfolios. So probably something that the Securities Commission would be completely horrified about, that a 10 to 11-year-old played any role in somebody's portfolio.
Do you remember any of the stocks that were in the portfolio?
Oh, yes. It was things like Reckitt and Coleman, Australian Foundation, all those companies that John Elliott knocked off, the flour millers that he took over. Yeah, my grandmother had a portfolio which was all about the things she consumed.
Good.
So if she ate it, she owned it. And
it's not a bad lesson for everyone.
No, it's not. Well, it's a swing. And there was it went from a situation where all portfolios were made up like that to the fact when they were all gobbled up, forgive the pun again, you couldn't actually invest in any domestic food companies.
They've disappeared?
They all disappeared. So that's how I got my first grounding. Nobody much seemed to own banks. It was staggering. They were regarded as being probably almost E-. And everybody owned Western Mining and BHP.
Well, it was the 60s, I gather.
It were, 60s, 70s. But, BHP was it was the stalwart stock. And Melbourne was Melbourne, so Western Mining was there too, and MIM possibly as well.
And so did you understand what was behind the symbols that you were investing in? Did you take the time out to say, well, that's a mining company and try to inquire what is mining?
Not really. I always found BHP possibly one of the dullest companies I've ever come across. It was reinforced when I finally met the senior management.
Got plenty of staying power.
Oh, plenty of staying power. And it, as I kept being reminded, it continued to pay its dividends during the Depression. And that generation, because it was so imbued on them and imprinted the Depression, that was very powerful. So I learnt there, and then I continued to have an interest in the stock market, and albeit only minor and peripheral,
Mm-hmm.
until I worked out that I wasn't going to get a law degree from the University of Melbourne.
You started.
I started. I did well enough to get into law, which was not a reason to do law. Thank God I didn't get into medicine. And I did well enough to get into law, but kept failing criminal law until they hauled me before the Unsatisfactory Progress Committee. And
Terrible name.
Oh, but Star Chamber is perhaps a better one, and unceremoniously threw me out. So I thought I'd got my arts degree, but I obviously didn't because they never sent me a letter.
Right.
So I'm
Which university are we talking about?
Melbourne.
Now, I maybe unkindly said that you've always found reading difficult in terms of some dyslexia.
Epilepsy, which I developed when
sorry.
I developed it when I was about 17,
Mm-hmm.
and which only reading induced. It's bizarre. It's sort of a weird form of epilepsy, which is now controlled with drugs. But
in those days,
well, it was controlled, but with drugs. But you've probably always been frightfully responsible. I've always been frightfully irresponsible. And it took me about 25 years to work out that trying to fight the inevitable, that is, not take the drugs, was a pretty stupid idea. And it was only after not having read a book for almost 30 years that I thought, well, bugger this. I may as well go on the drugs. And I can't read out loud. I still can't read out loud. But I can actually read stuff, but in a very tentative way.
Well, that abstinence from your drug taking probably meant that if you did take your drugs, you might have become a lawyer.
I would have been a horrible lawyer.
But maybe it was a good thing.
Look, absolutely. Look, fate is fate, and so stockbroking. When you look around, when you looked around in the early 80s or late 70s, early 80s, for something to do which didn't require a degree, which didn't involve farming, you sort of got a bit narrowed towards stockbroking. And but it was a difficult industry to break into.
So you get kicked out of uni, for want of a better term, and then you look for another job. Is that when you went into stockbroking?
Yeah.
So you're in your early 20s?
Yeah. My mother said to me, well, what are you doing? Go off and do something. And and
you responded positively?
Well, I didn't really have much. She was a very strong-minded woman. And I tramped around the broking firms of Melbourne. And I've always felt, as a result, immensely sympathetic to anybody going for a job, because when you knock on 24 doors and 23 barely even give you the time of day, you understand how depressing the whole process is. It's unbelievably depressing. I don't quite know what I sort of almost ran out of broking firms until finally one gave me a job.
And they talk about teaching children resilience, but we're not allowed to go through that process anymore. It's interesting in the modern times, but that does breed resilience. What was that one firm?
It was a firm called McKinley Wilson, which is no longer in existence, and sadly, and they were a mid-sized Melbourne broking firm with some fabulously good people involved, few not so fabulously good people involved. And the one person who I owe my whole career to was there, and who taught me, who I learnt what I do from. And it was a good grounding. But, in the way that you were taught then, you were given a desk, you were given a pad, you were given a JECnet, which is the old joint exchange computer with stock prices, and a telephone. And basically, the one thing that I thought was really good, there were no degrees or no qualifications, a bit of time as a script clerk where I was hopeless, a bit of time in other parts of the business to learn the back-end mechanics of the business, which was interesting. And then what the firm did, which I thought was inspirational, is they matched me up with their old clients. So young dog, old dog, which I always thought was a really interesting way of doing it. And
So you could learn?
yeah, and the old dogs could be pretty brutal and they could be pretty harsh, but they could also be very indulgent. And so you ended up by learning a lot from those clients, which
Were they institutional or retail?
No.
All retail.
No, yeah, all retail. I dealt with one or two institutional funds in Melbourne, but very much as a sidekick to one of the partners.
And you mentioned someone who you looked upon very favourably that helped you along. Who was that?
A bloke called Charlie Farquharson, who retired from broking about 5 years ago. And he was very courteous, had a similar business model, institutional private. So there was that interesting balance between private and institutional. No corporate in terms of what he did, my recollection was. Very straight, very proper, very much better market feel than I've ever had. I've fundamentally always had a hopeless market feel. My interest has only been in the companies, not in the market per se. But a very good sense of honour and dignity with his customers.
And you took that away?
I tried to. You try to pick up. The problem is you pick up in your career, you pick up good bits from people, and the risk is you pick up bad bits from people. And I think, generally speaking, I'd like to think that I managed to get the best out of some of those people.
Yeah, your judgment has been good and to extract the best rather than some of the bad habits. Do you remember at the time what was some of the stocks that you were recommending and what might have worked for you in those early days?
Well, that's why I still thought that I fancied myself as knowing something about the resource sector.
Mm-hmm.
And I was transfixed by Weeks Australia and the Jabiru wells off the northwest, where the drilling reports would be released at 2 p.m, I think either every Tuesday or every Thursday afternoon. And normally they were explosive.
In terms of share price movements?
Yes. So that's when it was completely acceptable to like oil. And that was really interesting watching. And as going back to Charlie had an interest in the resource sector and was stronger in the resource sector. It was only in my case that I worked out over time that I had zero skills in that sector of the market. But other than that, most of it was pretty dull. You come across these weird companies where there was one called Fibre Containers, where the takeover bid went on for 3 years. And there was one shareholder who was handed on to me who had the defining shareholding as to the outcome. And he seemed to have the patience of Job. And the price just kept going up and up and up, and it never got reported in any of the papers, of course. So I learned other things like that from people like him.
Very good. So when I first met you, you were at a small broking firm called Faulkner's.
Yeah.
So how did it come about? You said your original broking firm is not around anymore, so something happened to it.
No, I just left McKinley. I was there for 3 years, I think 3 years, and left. I would like to think on very amicable terms, and then went to Faulkner, which was a smaller firm, and they let me do whatever I wished. I worked with a bloke called Graham Adamson there, who has a journalistic background, and I suppose that's when I sort of really developed the beginning of the interest in emerging companies, the stocks that no one had ever looked at. And Graham was very good at that. And I learnt from going around with Graham that sometimes, whilst it was difficult to get in to see them, they weren't always easy, these companies. You know, they were perfectly happy. They didn't want some bloody fly-by-nighter from Collins Street sniffing around their domains. But you came across these fascinating groups.
And where are we now? Are we in the early 90s?
Yeah.
And it was post, or maybe still in the middle of that horrible recession that came after the 87.
Middle, although it was beginning to pull out. You know, it was beginning to pull out. So Bendigo Bank, the queues for the Bendigo Building Society had subsided in Collins Street, and it had survived, and so on. But the move towards consolidation in the securities sector towards the top 50, 100, 200 had inexorably started. So you still had enough broking firms like Value and ourselves and Holst, and not so much Ord because they were a big Sydney firm, but who covered smaller regional plays. But there were a lot of companies that weren't being covered by anyone.
And give us some names. We talked about Iron Carbide a bit earlier, but we're probably a few years before that. We're talking here in those mid-90s. What were some of the names that were undiscovered that you remember?
Well, Monadelphous was the sort of standout, and they were a Perth. They are a Perth business. They are a proud engineering company, which is the stockbroker's worst sort of business, and that is a company that's never raised money from its shareholders. Mm-hmm. Stockbrokers, as we all know, love companies that raise capital.
Investors shouldn't.
No, I agree with you. And I think I'm finally getting better at that. So Mono's was closed. It was ignored by the Perth establishment, who really looked at it as being run by a bunch of Sicilians, and there was Clough at the top of the terrace.
In Perth?
In
St
Perth.
George's Terrace?
In St George's Terrace in Perth. And then there was Monadelphous out in Applecross. And I don't know, there might have been one other broker, a bloke called Ron Hay from Values, who'd been to see them. And
why did you go to see them? What triggered it? Who said to you, Hugh, get on a plane, go across the other side of the country and go and see Monadelphous?
No one. But you go to Perth and you would say, we're going to be in Perth for 3 days. We'll go do the rounds and we'll go and see 20 companies. And some would be happy to see you. Some couldn't wait to get rid of you. And some just wouldn't see you full stop. And in the case of Mono's, it was fairly obvious within the first few minutes that here was a really good business. He was a really sound business with a phenomenally capable management structure, and a pedigree through United Constructions and so on. So
that was John Rubino's business.
Yeah.
And John had started United but then moved over to Monadelphous.
Yeah.
And Monadelphous was on its knees, and he didn't realise until sometime into the project of going in there that maybe soon afterwards, but it was a lot worse than what he originally thought. And he had to revive that company.
He did.
And so he took it from virtually nothing or something that maybe should have gone into administration to a multi-billion-dollar company. So I gather most of the investment community have just given up on it at this stage, and the 90s was a horrible time for mining in general.
It was. And it was not in on anybody's radar. So if you don't have the support of anybody in the capital markets at all, and so therefore you're relying upon your friends, relatives, and potentially the employees, it's a very lonely place.
And do you remember what Monadelphous was capped at, what its market value was when you first came across it?
About $12 million.
Right. And at its peak a few years ago, got to close to $2 billion?
Two and a half.
Yeah. And it was a fabulous investment and still a great company today. But
It's a great company, yeah.
John's moved on and then he passed away a couple of years ago, which was sad. But he was a great mentor of yours.
He was.
And what did he teach you about businesses and investing?
Oh, look, I think I'll go back to I'll put John into a group here, and I'll say the benefit of private investors and institutions is I've been lucky enough in my career to have a few private investors, and John was one of them, who, if I put a story and all three or all four people bit and said, yep, we like the look of it, I'd know that we were off to the races.
Give us the names.
I knew you were going to ask. In terms of the individuals?
Yeah. Well, John's one of them.
Well, John was one. Graham Curitan, ex-Guinness Pete, who pleasingly is not dead. Graham
is still annoying us.
Still annoying us. Graham is a very savvy investor. Alex Waislett's generally
from Thorney.
And one other who I won't name. It's an old lady.
Okay.
She's an old lady. She's 84, and she has got a phenomenal nose for good stories. But basically, if all of those say, yeah, we like something, then I've got a sort of a sniff test. Now, then if I find that all the institutions say the same thing, I know we're off to the races.
Give us a name where that's lined up, besides Monadelphous.
Well, Afterpay, obviously. Bellamy, obviously. PSC Insurance. John's Lyng. Credible Labs. They've all had the same thing in common.
Which is?
Well, they've all of them have got the have got the attention of those core investors. They've also got the attention not of all the institutions. Afterpay was by a mile the most contentious, where the interesting list of Afterpay and the IPO is not those who invested, it's of those who didn't, because a lot of people were not sold on the Afterpay story. But the rest of them, generally speaking, you got a herd mentality coming in. But it wasn't herd saying, never felt it was herd on the basis that we've got to be here because everybody else is here. I didn't feel that. They were all there because, or all the people I dealt with were there because they could see the value of those companies.
So let's go through a few of those stories. So we've touched on Afterpay, which became part of the psyche of Australian corporate and the general public. Yep. And we know now that it was taken over by Square in the US at an enormous valuation. You found it very early. Do you want to take us back and just tell us the Afterpay story?
Success has many fathers.
But I know you were there very early because you were talking to me about it at the time, well before it was listed.
The credit, all the credit is due to Nick Molnar and Anthony Eisen, a remarkable duo, just a symbiotic combination of two people. Probably one of the best salesmen and one of the best money managers, best salesman in Molnar and the best money managers in Eisen. They came to see me. They had this story. We'd floated a business called Touch recently beforehand, of which Anthony had handled that process. An investment that Touch had was Afterpay, which had upset a lot of the investors who said, what the F is this investment sitting in this balance sheet? It looks like a heap of rubbish. Anyway, they came to see me. I had a background which we haven't talked about because it's more painful than most, of owning a bookshop in Melbourne with my brother when I was about 20. Was a spectacularly unsuccessful investment of all time. But the one thing I do remember is the lay-by section. We had a room full of lay-by books and a charming, slightly wayward 85-year-old Irish bookkeeper who drank coffee laced with brandy and smoked cigarettes until she went into the lay-by room and tipped the coffee and the cigarette into the lay-by room, costing us about $40,000. The point I'm trying to make is lay-by is a retailer's nightmare. And so when Afterpay was put to me in the first instance, all I saw was, here is an answer, as a base case, here is an answer to a retailer's worst nightmare, which is lay-by. Lay-by, they're under a legal and a moral obligation to keep the goods. They've got to keep giving notice to the buyer, and this was a way of getting around it. Now, what they ended up by doing otherwise is history, but these two had a very clear plan as to how they were going to be able to drive activity in the retail sector, and they made the story sound so simple.
And you spent a lot of time trying to convince, especially Anthony Eisen, that they should float their company on the share market. He was hesitant.
Yes, it's the story of my life, sadly. What happens is when companies like Afterpay decide, when it gets to what I describe as the pointy end, they tend to go and ask their friends at the top end of town from those marvellous places like Messrs. Goldman Sachs and others, what do they think? And surprise, surprise, what do they say? Oh, no. But anyway, I did. I was able to persuade him. He was a man of his word. The thing about those two is they are both men of their word. And so they agreed to float, and the float was phenomenally successful. And the ride was thrilling, at times rocky, but as you put it, an extraordinary outcome.
Extraordinary, and a great exit.
And a great exit, and they created a verb. So, Afterpay is a lot more interesting than Hoover.
Well, it's still with us, isn't it? Even though it's some years since it got taken over. I mentioned in the introduction, another aspect of your willingness to be involved with your companies is to go on boards. Another good story with a company that is still around today, and we've had on this show the current MD, Andrew Alcock, who came on a little while ago, is Hub24, which also rose out of the ashes and built its platform. But you were a supporter, but on the board in the early days, and it was a bit of a bloodbath, if I remember.
It was. It was a terrible mess. A terrible mess. And I'd left Bell's, merged into their broking firm. Business was called Investor First. There was Hub and there was the broking business. The broking business was, I'll be polite, average. The platform was...
I'll take that as below average.
To be polite, nascent. And so you had two subpar businesses, subpar board, subpar management. In fact, there wasn't really anything about it that wasn't subpar. So the advice given strongly by a prominent accountant in Sydney was call in the receivers all too hard. And thankfully, that advice was not taken. Bruce Higgins came in as chairman, Andrew came in as MD, and he and Jason Entwistle and the team did a remarkable job with growing Hub. I was on the board. You know, the role of an NED is more just to steady. So to hold a nerve, because a lot of boards lose their nerve. And it's very easy when money is short, and money, believe me, in that company was seriously short. It was so short that I can remember being in Flinders Lane at 4 p.m. or 20 to 4 on a Thursday afternoon, pleading with two funds to provide us with funds commitments so that we would not be put into receivership that night at a $15, $20 million valuation.
It's worth about $3 billion today, I think.
Yeah. That's nothing to do with me. All the credit goes with the people who run it. But the one thing, and the reason I sit there on boards sometimes, is that boards tend to spend a little bit too much time thinking.
Rather than doing.
Well, no, they're actually a bit more dangerous when they start the doing. You know, boards are there to direct. They're not there to run. And so, and then they go away and they think, and then they ask lots of questions, and then they deep dive into the business. Now, if the management aren't good enough, throw them out and get somebody else who's better. Now, there are plenty of people with field marshals' batons around in this country. Give them a go. You may not get it right, unfortunately. No guarantee you'll get it right. Hub did. Hub got, they got an A-grade chairman and they got an A-grade MD. And good luck to them. They've done an amazing job.
And you went off that board once you thought they were on the right track?
I went off that board because I have a very strong view that a few years is enough. I think that, remember that show, The Loneliest Hobo? Where
the little dog that used to go around.
Yeah, and he wanders off out of town. I actually think that the role is, if I've got any role, I'd like to think that it's to a degree a fixer, or I'm there to help fix. I'm not a fixer. I'm there to help fix. And once the ship is steady and once the business is on course, having a broker there can actually be a huge impediment.
Because a lot of people don't like that, do they? The fact that you're on the board, but you're also a broker and advising the company. How do you manage that component? Because people will say, well, there's conflicts there. They'll want to raise money for them. But on your occasion, there are opportunities to raise money, but you've also got clients that have invested in the companies, I gather.
Well, normally I'm on the board of Credit Clear. Now, I'm on the board of Credit Clear because Credit Clear was not looking good. Now, I'm not stating any facts that are, you just look. Now, we had too much at stake. We had too much at stake for that to go bad. And
we being you and your investor, your client community.
Yeah, the community. I took we in a general sense because I do look at the clientele as being it's when things go wrong, if it's within your power to fix, you should try and fix, I think. And Anyway, that has been fixed. That business is now in great shape. It's in great shape and it's well run and it's ticking along very well. There will come a time when, like the loneliest hobo, I'll leave town. And
That's a good sign, though.
well, it's a good sign. Look, if I'm going to be completely selfish, sometimes you think, well, wouldn't it have been nice to hang around? But I don't see really, I don't see that. Would I have been, what difference would it have made to me if I'd still been on the board of Hub? And I would have been on the board, if I was still there, I would have been on the board for 12 years. Well, these people who stay on boards for 10, 15 years, really, it's ridiculous.
It's a bit stale. That raises an interesting question. So what would you consider in your job a success, or you're being successful?
Well, success in the first instance is getting it right. The subliminal way that manifests itself is that stocks do not go up by being supported by one house or one person. What happens, or what needs to happen for true success, is for companies to outgrow people like me. So in the perfect world, what will happen is we find them while they're young. Think of the Jesuits, get them while they're young. And then over time, first a whole range of other brokers come in. Then after that, the investment banks come in. And then suddenly you're sitting at a table in a restaurant and you hear some snappily dressed investment banker talking to somebody about this fabulous new stock that UBS have found, which has only got a valuation of $2.5 billion. But if you're set at $20 million, you don't care. But you just have to get over that thing. We're a primary school, and we might like at times to accept that we go into secondary school. We're certainly not a university.
There's one more company I'd like to just mention before we leave, which is Bellamy's, the organic infant formula company that came out of Tasmania. Was another great success story that you floated. And as you described, it was part of the other white powder boom, which was quite interesting. Where did you come across Bellamy's? And once again, eventually it got taken out when things did get a bit choppy later on. But it was a great success story from virtually nothing.
Bellamy was a marketing company, really. It didn't produce anything. The directors patted the cans, and the other white powder, of course, the first is what's consumed in Sydney, and the other white powder is infant formula. And it was a craze. And the one thing about the stock market is it goes through these crazes. And we went through a mining boom, and then we went through a .com boom, and then we went through the infant formula boom, and then we went through the buy now, pay later boom. And Bellamy, talk about feel good. It was the greatest feel good story of all time. The cans were great. The colours were fabulous. Laura McBain was a very credible presenter. China was going insane.
The stars aligned.
Absolutely. God was in his heaven, and in front of him were all the stars. And so the stock went from $1 to $16, and then I think they sort of perhaps weren't paying as much attention as they should have been. And blame's an interesting issue, but long and short of it was that was yet another example where the board appeared to me to be looking as if they were going to lose their nerve and they were going to put the company through. It went into suspension for 3 or 4 months. Anyway, board change. There was a board spill. The board was changed. The stock came back on. It raised capital, and in the way of all flesh, the Chinese ended up by taking it over at $14. So if you got your timing right, you went in at 1 and you sold at 16, and then you went back in at 3, and then you sold back out at 14. But of course,
not many people did.
Not many people did.
Some got, but me being one, luckily in the early days.
But you made a quid out of it.
Yeah, the first instance when it was on its run, we did very well. So we thank you for that. So it's interesting just where broking is. I wouldn't mind expanding the conversation a little bit. You obviously are at Bell Potter these days because you sold Faulkner's into Bell Potter, if I remember correctly.
Well, merged them really.
Merged.
You don't get cash out of the Bells.
Well, and you did depart for a while at Wilson's, but you're back at Bell's, and that's great. And part of that is that you mentioned your wife, Bridget. She's there, and you've also got your kids involved in the broking game. But broking's changed since those early days when you knocked on 24 doors and got one answer in the 80s or early 90s. These days, commissions are not what they used to be in the secondary market. You do rely on corporate transactions to keep the doors open. Where do you think broking's at, and are you optimistic?
Well, there's no point in being a stockbroker if you're not optimistic. Yeah, look, I think I would take the view that there is no future at the top end. The top end is so crowded that you have a bunch of firms all crowding after a small number of companies. And given what's going on, that the number of companies, we're likely to be faced with a leader list of the 4 banks, BHP, Rio and Fortescue, because everything else will have got knocked off. I actually am increasingly optimistic about further down the lists because I think that is where the great stories of tomorrow will come from. And there ain't no competition, or the competition is so limited. You know, if I go back 20 years, there were 10, 15 firms competing. Now there are...
For the small end of the market.
Yeah, 3 to 4. Now, you can say, well, how can a little company come from nowhere? Well, they can if the people are good and the business is good. Add water and it'll grow. And if we can persuade good companies to IPO, same thing. But I'm optimistic. I think you can come across businesses where the clientele can make a lot of money, but you do raise a very valid point, and that is that commission rates have fallen and broking houses rely upon ECM or placement fees and therefore scurry after placements. And the problem is that historically, most stocks, when they raise capital, do not trade well out the other side. And that is a real issue. So I don't know how you rationalise that. I do personally think, myself included, brokers have to be a lot better at where they place the stock. So they have to be a lot more considered about where the stock goes.
In terms of which investors get allocated.
Yeah. If you know it is going into the hands of people who are rampant traders and the stock is going to come out within 24 hours.
Of a placement or a raise. Yep.
That's not good. That's not good. So I think that's something that needs to be given a lot of thought.
So we're talking about small companies. Have you got a couple for myself and the listeners which you like at the moment, given you've always got a few in the kit bag that you think got good futures?
Oh, well, look, there's always got to be something, hasn't it? There's a little business in Melbourne called SKS, which is a It's called SKS Technologies, but it's an electrical engineering contracting business. The reason being, I suppose, that the reason for liking the business is with all this mad rush to electrify the country, you've got to get people to connect it. So you've got one in WA, Southern Cross Electrical. You've got one in the East Coast, which is SKS, whether it's data centres, whether it's batteries, whether it's anything else when it comes to electrification. They all have one thing in common. They need the people to actually allow that electrification to occur. So I use the analogy that 20 years ago you were told, if you want to make your fortune, become a plumber. Think of Reese. That was the way to make a quid. Forget about being a lawyer.
Which you did.
Yeah. But I think actually becoming an electrician might actually be better now than becoming a plumber.
Makes sense.
And it's certainly better than becoming a lawyer.
Okay, what about an unlisted one? You hope will come to the market one day.
Well, I'm trying, but the problem is it's always a case of, it's like childbirth with some of these unlisteds. There's a business called pay.com.au, which is a points platform, and shown remarkable growth over the last 2.5 years. So from 0 transaction value to 3 billion odd transaction value. And think of Qantas frequent flyers, as being, I don't know, a Datsun 240Z, roughly speaking. This is probably more like a BMW in the sense that rather than exchanging your points as you can with Qantas on Qantas flights, there aren't any, or Dyson vacuum cleaners, well, we've all got enough, or crappy wine. With Pay, you can exchange on Qatar, Singapore, Virgin and Qantas if you want, and other things. Now, points are just another currency. That's all they are. And I think it's cleverly put together, and I think it's a great B2B product. And I think that that growth, to get to 3 billion odd TTV with only 13,000 customers odd, if you look at the size of the market, there are roughly, Qantas has about 500,000 SME customers. So it's a big market.
Big market. Well, we look forward to that one. Hopefully you can convince them to bring it to market. So you're in your 60s now.
Yeah.
You can be called a veteran. Do you keep on keeping on, or is there an end date to the Hugh Robertson broking story?
No, look, I've got some things to fix up. Yeah, unashamedly, I've still got some stuff to fix up where I can.
In terms of corporate stories that you're following?
Businesses that we've backed, which that have needed work. I strongly believe that as the contract with the clientele is to do whatever you can to fix stuff up which hasn't worked. I don't know if you get thanked for it, mind you, but I think there is that sort of, to use a very strange term, that noblesse oblige, that you have an obligation to do what you can. So there's that. I also love writing. So I write a newsletter, which is all designed for people to read while they're bluntly either having a piss or something else, and where I just put my views in terms of something I've seen. And
so you still love the discovery process?
I loved it. And the beauty is there's so much to discover. So I don't think I'll give that up. And I speak to people. I don't know if they learn anything by speaking to me. I speak to some institutions and I speak to some private clients, and life is good.
So we're not going to see you retire to the garden anytime soon?
As I said, I'm a shit farmer, and I like being in the pond.
Very good. Well, it's been A great career, colourful, a lot of good stories. Thanks for coming in to share them with us today. And we look forward to some of those undiscovered gems coming out where hopefully we might see another Afterpay or a Bellamy's. That would be nice if you can organise that. But thanks very much, and it's been a pleasure chatting.
Thanks, Matthew.